Hello, everyone, and welcome to another Wall Street for Main Street podcast. Today, we have a special guest. His name's Sean Hyman from the UltimateWealthReport.com. Sean, welcome to our show.
Good to be here.
All right. First thing I want to get into was the most recent Federal Reserve announcement of they said the two words, no taper, and on that day, you saw the stock market go from a negative to a big rally. So I have a question. What's your thoughts on the Federal Reserve tapering? I just read this morning that some people think they'll eventually taper. Do you see that in the future, and what's your thoughts?
Yeah, I mean, they initially sound scatterbrained because they talk about tapering and then they delay tapering, and then now tapering may not happen under Ben Bernanke's reign, and it could fall to the next Fed governor to see if they taper or not. So there's a big cloud over it right now and a lot of uncertainty. But just the fact that they decided not to taper, they had sent us such a tapering message that the market had already kind of factored that in. So institutions had already readjusted their positions more conservatively, more defensively, and then they surprised the market with this taper, with this no taper thought. And so many of these big institutions readjusted their portfolios because they know that it's likely to be a pretty good risk-on type of environment, probably through at least the December Fed meeting, because they're not likely to taper in October, being that they just skipped on this one. So it really jolted commodities a ton. The stock market was up about 1%, but oil, gold, silver, things of that sort were up 3, 4, 5% on that same day when the stock market was up 1%. And that's because they believe a lot of inflation is going to get stoked by this. If for no other reason, the dollar is getting more devalued. The dollar drops quite strong on that day, and so that alone will kick up commodity prices and raise some price inflation there.
Yeah, I definitely see the commodity prices. I definitely see them in the higher future. That's just my opinion.
Mm-hmm.
I think there's a lot of inflation baked into the cake just right now. A lot of banks, especially small banks, aren't lending. So that's what I've been seeing. In terms of the stock market, where do you see it heading? Right now, I think one of the reasons they didn't taper was because the debt ceiling coming up next month. What do you think? And how's the stock market going to respond to this and the debt ceiling?
Well, I think that's probably one of the reasons. I think it was kind of, because they know the economy is still not on super sound footing. It's chugging along okay, but nothing really to brag about. So they're thinking, well, we probably need to take this cautious tone and just not mess with it right now because we do have the debt ceiling debate coming up. There could be a lot of, who knows what's going to happen politically there, and so that could be, that could always end up being a mess and hurt things economically. So I think they're trying to leave well enough alone. As far as stocks, stocks are starting to get expensive overall. I mean, the Dow, the S&P, NASDAQ, a lot of these indices are starting to get to the high end of their ranges PE-wise of what they historically go to. So it means that, people are paying a lot for the level of earnings that these companies are putting out, and it's on the high side. So when you're committing new capital to the S&P 500 index fund in your 401k or something right now, you're taking on higher risk than you did, many months ago or a year ago. So so starting to get a lot more difficult. There could still be some upside in stocks, but it is probably getting more limited, and there does start to be now a lot more downside risk relative to the upside return in stocks, and there are a lot more values to be had in a lot of beaten down commodities.
Oh, I definitely agree. In terms of beaten down commodities, do you see gold and silver as a value play right now, undervalued?
Yeah, I see gold and silver as undervalued, and even more so than that, gold and silver miners. So gold I expect to eventually make its way back up to the 1600s, over the coming months. Silver I think could head to the 25 to 27 level in the fairly near future. So I think they're going to do well. The things that got even more pummeled than gold and silver were gold and silver stocks. If somebody charts like GDX, for instance, gold miner index over gold, they'll see that gold miners got whacked far more percentage wise than even gold itself, which took a pretty good pummeling. So those are even at deeper values. They have worse investor sentiment behind them, which tends to make them snap back when investors realize that they got it wrong and went to an extreme. And so I think there's a lot of value to be had in gold mining stocks, silver miners, et cetera.
Yeah, another contrarian one is I like right now is potash. I think with the Russian cartel, and I also like uranium. Do you have any thoughts on those?
I do think potash is out of favor, so that's huge, and also particularly on potash stock POT, that particular potash stock, the sentiment is just atrocious right now. Back in late July, there was just enormous selling. I mean, there was like almost 100 million shares sold in a day, and as potash kind of fell off the map. And I think that's probably overdone, and you'll likely see a bottom soon if we haven't already seen it, and potash start to turn around. Uranium, I don't have as strong of thoughts on, but I do know uranium has been beaten down, and I do expect it to turn around, but I don't have as strong of an opinion on it.
Yeah, it sounds like you like to buy things when they're not liked, which I would say is a great contrarian way of investing. So, am I correct there?
Yeah, absolutely. I like to. I'm kind of more along the lines of like a Jim Rogers or a Warren Buffett type that really likes to find stuff the market doesn't like and it's out of favor, because generally investors eventually misprice assets. In a perfect world, assets should always be properly and fairly valued and fairly priced. And some people think that that's always the case with like efficient market hypotheses and theories and stuff like that. But that's not the case, because investors and markets are run by humans, and humans have emotions, and they get overly greedy and overly fearful. And when they get overly fearful and overly negative on something, they end up making a misjudgment and mispricing that asset by getting too bearish, too negative, and it provides an opportunity for the investor to make an above-average return and beat the market. So just like when we get emotional and we have a heated debate and argument with somebody, we end up saying things that we don't mean and shouldn't say and all that. We make misjudgments. The same thing happens when investors get overly negative on stocks or commodities. They make misjudgments there, which produces undervaluation and something able to be taken advantage of.
Yeah, definitely. One stock you are known for is Apple. That's actually, unlike the stock market, that actually has corrected since its $700 highs. And if you look at it, it seems like they're trying to turn into a good dividend stock. What are your thoughts on Apple's future?
It's funny. Even with Apple, Apple was so loved at 700, and then at the high 300s and low 400s, it's been hated, and the sentiment is still so bad on it, and it's crazy, because you should theoretically love it a whole lot more in the 400s and 500s than the 700s, but so the latest thoughts are always. Apple's a has-been company, and Steve Jobs is gone, and so therefore it's done for, and so people should move on. But the reason why I differ with that is because, one, it's made a turn on its chart. I mean, it's made its lows back in April, and it's been making higher highs and higher lows ever since. So the chart's proven that out to be a fallacy by the investing community, and two. It's not a done-for stock. Yes, Steve Jobs is gone, but that's kind of like saying, Walmart was done when Sam Walton was gone, or Ford or Macy's when their original person was gone. That those stocks were over, and and it was history. And that's just simply historically not been the case much of the time. It does take a huge visionary to take you from zero to national name brand recognition and international recognition, but it doesn't take quite as much of the leader to take it onto its next phase. And just like Walmart probably hasn't had as good of a CEO as Sam Walton was, but still took it onto greater heights, I believe that Tim Cook can do the same. Also, I would hate to go against a company that has $147 billion of cash on its books. I mean, that's more than any company in the world that I know of. And so that cash position alone is an enormous fortress that helps Apple a lot. And should Apple lose its innovative edge, they have the cash to go out and buy the individual innovators or entire companies that are innovators to continue on that innovative path. So they're far from done for. And finally, their PE valuations are down in the 11s, whereas a lot of the overall market is in the 17, 18s, and 19s or above. And so that stock is priced far more cheaply relative to its earnings than the overall market is. That's another reason why I like it.
Yeah, and it has a lot of good growth coming on too. So I actually like Apple now. I didn't really like it at $700. I'll admit I used to own it, and I sold it at $450. I bought it at right before right after the market crashed. So I was a little early on the selling, but I think it's a good company now, and it seems like they're focused on returning capital to shareholders as well.
It is. I mean, it's you've got the world's largest stock buyback program, which is, I mean, that naturally puts a lot of buying pressure under a stock and helps to support it, which is phenomenal. So if you're ever going to buy a stock that's been beaten down, that's the time to buy it, when they've got the biggest buyback program going in the world. They've upped their dividend. Their dividend it lately has been ranging between about 2.6 and 3%, dividend yield. So that's an awesome yield. So there's a lot of things to be said for it. And also, even with Steve Jobs passing, there's still some things that Steve Jobs supposedly mastered that haven't come out yet. Like Steve Jobs had said he'd cracked the code on the TV and they were going to come out with something there. Well, that's still yet to come out. So if that ends up coming out, that'll still be something that was a Steve Jobs idea that Apple continues to get blessed with. Also, something that investors are not taking into account in the stock price, really, in my opinion, is that their future business that lies ahead of them. They just had the door open to go into Japan through NTT Docomo, which is 60 million subscribers that they got the opportunity of servicing there with iPhones. Now, obviously, every one of those subscribers won't get an iPhone, but quite a few will. And then China Mobile will open up in the coming weeks or months, possibly next year. But either way, it's something fairly near term for the investor-minded person, and that's something like a 700 or 800 million subscriber market. So it's just some huge potential growth for Apple to get the iPhone in the hands of so many more people around the world.
Sounds like a good business plan.
Yeah.
I actually want to switch topics now to the oil market.
Mm-hmm.
Right now we've seen it go up, but it's corrected a little bit. And now I've had numerous different guests. Some people have said all geopolitical tensions. Some people believe it's cost of production, that a lot of oil companies were barely making money, so if it wasn't Syria, it would have been something else. What are your thoughts, or do you think it's maybe a combination of the two?
It's a combination of a few things. One, I mean, you do have global growth returning. It's not stellar growth, but it is growth. You do have China and Europe improving their economic data, so that shows that they're recovering and healing, and they're on the mend both at the same time. So having both China and Europe recovering both at the same time is huge, and that puts more demand upon those supplies of oil. So that's huge, and I think that's going to continue at least for now. And so that'll keep oil high, whether there was war or no war or what have you. There's still production that's not still quite up to snuff of what it used to be. Libyan oil production had gone from a peak of 1.4 million barrels a day down to 150,000 barrels a day. That is starting to come back up. They are expected to ramp it back up to like 800,000 barrels a day, but we're not quite there yet. It'll take some time to do so, and that's still far under their peak productions. So there's a lot of things going on still in the Middle East. I mean, Egypt still really doesn't have a real government in place. So there's a lot of things that could still happen in the Suez Canal region, that sort of thing. So it is a lot of there are a lot of factors there. Of course, a lot of the the oil drilling that goes on goes into deep water drilling these days, and the deeper they have to go, the more expensive those costs are to pull that oil out of the ground. So, some of the cheaper oil is behind us, and some of the more expensive oil is before us. So they do have to get more money per barrel to make it profitable to pull this stuff out of the ground. So it's really a combination of all these factors that really keep oil at this high elevated level, and it's just one reason why I just think that owning oil stocks, some of your biggest oil names or some of your best, no-brainer trades out there. I'm particularly like BP Amoco, symbol BP, because it had been so beaten down after the oil spill that it trades at a PE of 5, forward PE of 7, so it's super cheap relative to the market. And it's got a over 5% dividend yield, and it's got like $29 billion of cash on its U.S. books to back up that dividend. And some people say, well, they're not quite out of the woods with litigation. But as far as BP is concerned, I believe they are, because they've set aside additional funds for that. And also, all of that has already been factored in their stock price. So it's one I like a lot.
Yeah, I definitely can see that. I still I'm not sure. I don't underestimate the punishments governments can dish out on a company, but BP is pretty well geopolitically diversified, and they are good at forging relationships with governments. So
they are, and a lot of their strength was tested in this bout where they, when they had to pay the like $30 billion out to the people with the oil spill, and even with all the money that they paid out, they still were able to continue their stock buyback program. They still were able to honor and hold their dividends steady. So I think that's a testament to how strong the company really is.
Yeah, they are definitely, and I think oil is definitely in a bull market. The IEA estimated that energy demand would increase in 2014, and I see energy demand just increasing drastically. One of the reasons is China. A lot of people are owning cars for the first time, so their demand isn't going to tail off because we all know once you own a car, you're not going to not use it. Would you agree with that energy worldwide demand scenario?
Yeah, absolutely. I think China and India, and all the BRICS for that matter, are going to be putting more cars on the road, using more cars. And, even here in the U.S., I mean, everybody has a car these days, and that wasn't always the case. I mean, back in the 60s and 70s, a lot of times you had a one-car family, and just, mom or dad drove that car. And these days, dad's got a car, mom's got a car, every teenager's got a car. There's so many cars in the driveway, you can't get them all in the garage, and they park them on the street and everything. So even here in the U.S., I mean, we have more and more and more cars, but especially in these emerging markets, there's a ton of growth there, and that's why even a lot of the auto shows now aren't so much in Detroit. They're over in China and Shanghai and all these different places, because that's where a lot of the demand is coming from, and I expect that to continue. When you've got China growing its economy at 7+%, and India's had 5, 6, 7% growth and things of that sort. I mean that's booming at a serious clip when a lot of the rest of the world's growing at 1.5% or less. That's huge, and so these people are going to need to get around and be moving, in an economy that's growing so fast like that. And an automobile is the answer to that. So I think that's going to continue to put demand upon the supplies of oil, and that story continues.
All right. Well,